Okay, folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Tuesday, September the 21st, 2011. All right, folks, tonight's focus stock is going to be Netflix, symbol NFLX. It's a NASDAQ-traded stock. First thing we always want to look at when we're dealing with extreme oversold stocks is the short interest. And unfortunately for NASDAQ-listed stocks, they are reported only once per month, and the last report that we had was about a day and a half short covering. I would now estimate it to be between, I'd say at a minimum probably about 3 to 5 days after this sell-off in here. So we should have the makings of a fairly good short covering rally in the next couple of days. Now, yes, it hit my screen as an extreme oversold stock, and a number of variables go into the stock being labeled an extreme oversold stock. What I always try to teach my members is this, and I like to point it out because I make my bread and butter off of trading extreme oversold stocks and extreme overbought stocks. Whether it be on a daily basis or a weekly basis, it doesn't matter. What I always caution them against is reading books about technical analysis. And in this instance here, you're taking a look at the relative strength indicator, not to be confused with the relative strength index, the relative strength indicator. Now you'll read, and I've named it here, Technical Analysis for Dummies, that when a stock, they use this blanket term, very bland, very blanket statement, a phrase of, or a rule I should say, of when a stock goes below 30, you buy it on an RSI. Now just imagine had you bought Netflix when the stock went below 30. Guess when you would have bought it? The day of its gap down, its collapse. That's when you would have bought it. Even if you would have bought it when it went below 20, that means you would have bought it late Monday and you'd be down 10% on the stock in one day. Think about what that does to the morale of a trader. That's why I always caution, don't use these books as the end-all and be-all. You need to use the indicators. You need to use price action, candlesticks, volume action. In the case of the stochastics, this is one of the most favored indicators of traders, and rightly so, and it's one of the most favored by these book writers who love to write books about the Stokes. And their rule is, when the Stokes go below 20, you buy the stock. Well, there's a lot more that goes into that than what they lead you to believe. But unfortunately, they don't know enough. These people that come out and they pretend to be experts don't know enough. Now, had you bought Netflix when it went below 20, and yeah, you could see it did rally for about 2 days, and then it collapsed. So please, I beg of you, don't rely solely on these indicators. That's why I got into this, the Contrarian Trader in the first place, is so people stop listening to CNBC, stop listening to these talking heads that come out and tell you to buy stocks when you should be selling them. So let's get to NFLX, why I like it and why I don't like it for certain reasons. All right. Why I like it. RSI below 20, which is good. It can go lower. You have massive volume. Over 30 million shares were traded today. And it may seem bad, and it is, yes. But this is capitulation sell-off here. That doesn't mean that the bottom is in on Netflix. It hasn't hit my historical price target yet for me to get comfortable and get long of this stock. I'll go into that with my members later on this evening when I talk about the stock market as well. And you need to pay attention when you get involved with getting long of a stock that's so beaten up. Because if you don't pay attention to the overall health of the stock market, and the stock market that begins to sell off, what are fund managers going to do when the market begins to sell off? They're going to sell their losers first. because they don't want to go. Remember, the end of September is the end of the quarter. They don't want to show their shareholders that they own any Netflix. They want to get rid of it now. They don't want those quarterly statements going out and their customers seeing that they own Netflix and they took this beating. They want out. Now, if the market declines, what happens? You have margin calls that go out, especially for holders of Netflix. Now, people don't cover those margin calls. The first thing that those brokers are going to do is they're going to take a look and they're going to see, wow, look at the beating of Netflix. They're going to sell Netflix. So they're going to sell their losers first. And those are the pros. And if you're not a pro and you're not disciplined, you're really going to get hurt. So you really need to wait for the stock to get down to a historic support level. And again, I'm going to go into that with my members this evening, as well as commentary on the overall health of the market today, because I have to be honest with you, I was not pleased with today's price action, and I won't bore you with it, but I'll go into it again later on with members. So the other thing you need to remember with Netflix is this. You have the 50-day moving average, which is steadily and rapidly declining. Now, you have people out there, technicians, that this is the Death Star. This or Death Cross, whatever you want to call it. Because when you see this 50-day moving average cross below the 200-day moving average, you just see a lot of technical selling. But for contrarians, my members, we know that with this cross also brings opportunities, because many times after that cross occurs, you see a counter trend rally. So we may be getting long of Netflix for a quick trade in the next couple of days. We might even short it after we see the short covering end, and then perhaps get long of it again in the future when it hits the key criteria of what I want to deem as an investment. Remember, Netflix is trading right now at about a 32 PE on a current basis. On a forward-looking basis, is a PE of 19. Even if they came out and lowered their earnings per share guidance for the next quarter, so what? It's still a growth stock. Yeah, management stumbled, but overall it's still a good company. And I'm not a fundamentals guy for the most part. I use charts. I'm a chart guy. And the charts are telling me right now on a short-term basis, this stock is approaching along. And what I provide for my members, I'll send out an alert when I do execute the trade. And when I sell and take profits, hopefully profits, I don't want to be too cocky. When I sell the stock, I send out an alert as well, so they know when I'm out, they know when I'm in. I'm going to get more into the intraday trade of Netflix, where I think it's going to go tomorrow, and where I think it's going to, where the historical support levels are in the coming weeks. So please sign up for the 14-day free trial offer. You can get the members' commentary on Netflix and my opinions on the market. The moment that you sign up, it will be sent out to you, and I hope to hear from you. All right. If nothing else, sign up for my newsletter, and you'll get alerted to anytime I post a blog. And I will talk to you soon, folks. Thanks. Take care now.